You are listening to chartingwealth.com for Thursday, the 28th of September, 2017. We have stocks up for the day, both the S&P 500 and the Nasdaq 100 as represented by the Qs. We see that TLT, the 20-year bond fund, down big, 1.51%. Gold, not as much, but still down almost a percent at 0.94%. Let's start off with stocks that are up. We still have a red open box candle for the week, even with all that up movement. Still didn't close as high as it reached during the previous week. We do see, however, the derivative oscillator is getting much closer to the red signal line, and we also see that the derivative oscillators are getting very close to crossing over into green as it was back on the 11th of September, and we see the price percent oscillator getting very close to crossing over the red signal line, which would of course be a weekly vertical crossover, which offers some real trading opportunities. We'll just continue to wait and see. Still confirmed down. We do see on the two-day chart, of course, it crossed over going up back on the 12th, the two-day candle ending on the 12th of September. And again, we can see really a sideways slide at this point if this up movement continues. But it's so interesting because right as it looked like the two-day was getting close to crossing over going down and the derivative oscillator is still losing energy, we see that the weekly is getting close to crossing over going up. So we'll continue to watch. What we've really had for the last few days is a sideways slide. As we delve into the 4-hour chart, what do we see? We see, of course, that 4-hour chart has not crossed over going up yet, but significant reduction in downward momentum. We don't call it upward momentum until it switches over. And we do see the last two candles are green. Actually, we have seen it sort of bottom out on the derivative oscillator all the way back on the afternoon of Monday, the 25th of September. So far during the course of the week, there has been steady up movement. We'll continue to monitor, let you know if indeed and when any weekly vertical crossover occurs. Of course, it can only occur at the end of the candle, which would be Friday. For all of you who subscribe to our text service, of course, we will send that notification out to you. How do you subscribe to that? Well, you have to be in the States. If you're in the United States, you can. Otherwise, just listen to the comprehensive review and forecast that we produce every Friday and put out over the weekend. We also will tell you that's occurring. But if you want to sign up for the service, you need to register, that is, become a subscriber at chartingwealth.com to the Daily Market Review, absolutely free. The instructions are in there. It's real easy. You just send to the number 33222 the word charting wealth. One word, no space between charting and wealth, and we will have you on that list. You will be notified if and when there is one. That is a weekly vertical crossover. What do we see going on the weekly chart? On the Qs, still decidedly down, even with almost a percent of up movement, more than double what we saw in the S&P 500. The Qs still has downward momentum on that weekly chart. We did lose a lot of the downward candle. There now is a large wick on the bottom of the red solid candle. We saw indecision over the course of the past week, ending on the 22nd of September. And what we see so far this week is downward momentum paired off a little bit. As we look at the two-day chart, we see that it, of course, is crossed over on the 22nd. There was a two-day vertical crossover going down on the 22nd, Friday of September. And now we have a lot of indecision in this latest candle. First day of the latest two-day candle, we have a green spinning top. Means indecision. All the movement on both the wicks on the top and bottom are all within the prior two-day chart ending on Tuesday the 26th. So that is interesting. And what were we waiting for? For a potential jump into a down trade on the Qs? We're waiting for a pullback, which is underway. This pullback, once it crosses over going up, of course, we will get into the waiting mode for the 4-hour chart to cross back over going down. Then that is our trigger for jumping into a trade. Remember, the weekly and the 2-day chart have to be going in the same direction. Then we wait for the 4-hour chart to move in the opposite direction. That's called the pullback. And then once it turns around back into the same direction, and in this case it would be down, we then jump into that trade. Once it pulls back, does that mean that it will actually reverse back over and go down? No, it may not happen. But if it does happen, that is typically our trigger. And of course, things will get a lot easier once we get out of the doldrums of the summertime trading zone and into the fall-winter trading zone. When does that happen? October 1, the same time that we put out our special broadcast on the quarterly chart as to what we can read from the latest ending quarter. And again, we want you, particularly folks who are interested in long-term investing, to pay particular attention to the quarterly chart. It is magical. It's the S&P. That's the one we found that works. Unbelievable. Would have on your practice trades gotten you into the market when the market started zooming and out of the market when it started crashing over the last 20 years with surprising and incredible accuracy. If you've not taken that initial class, well, you need to do that before you even think about signing up for the new class. And in fact, we're going to put that latest new class for everyone who is a subscriber. So in order to get the prior class, so you have some background, understand what the hell we're talking about, you need to go to chartingwealth.com and you need to sign up for the daily email. That's the daily market review. And then when you get your first email, just reply to that and say quarterly. I would like your quarterly chart. You put the word quarterly in there, we will get the quarterly chart to you and that initial training. Okay, keep moving through this stuff. Move along a little faster. Make sure we hit everything we need to. What do we see going on? Going into the third week of strong down movement on the TLT, that is a 20-year bond fund. Looks like we have a weekly vertical crossover underway. That has finally occurred. Of course, we had a great run-up over the course of about 5 weeks of just beautiful, beautiful profit in that TLT for our virtual trades. And now we're going into the third week, and we may, at the end of this week, unless there's some significant up movement, we're probably going to have a weekly vertical crossover going down. What do we see on the 2-day chart? Of course, it's been in a down move since its 2-day vertical crossover on the 14th of September. Big drop so far this week. What's going on that 4-hour chart? Well, it has again crossed over going down and looks like it pretty much stayed about the same, somewhere around 124.91, so around 125. So we'll continue to watch that and pay attention and see what happens at the end of the week. If we have a weekly vertical crossover called, then of course we'll be looking to see if there's a jumping in point the following Monday at 10:30. You'll hear more about that if indeed that weekly vertical crossover occurs. What do we see going on in gold? Down about 1% for the day. Third week, second strong week of down movement in gold. Don't have it crossing over yet. Still green on the derivative oscillator, but we'll see if that price percent oscillator crosses over going down. Take a quick look at the 2-day chart. Of course, it crossed over on the 2-day vertical crossover back on the 20th of September. Many, many days of down movement. One little bright spot there around the 26th, the 2-day candle ending then. But we've got a nice trend line on that 2-day chart, and price movement is staying below it, even on the green candle ending on the 26th. So the first day of the latest 2-day candle, again, more accelerated down movement. Let's look at that prescient 2-hour chart. Again, looked like it was backing up and primed to cross over. And what did it do? Bounced right off and headed down again. So we'll continue to follow gold, and you see over and over when that 2-day or that 4-hour chart moves in one direction, when it doesn't cross and bounds off, I would just tell you to sort of watch and pay attention. Go back a little bit in time and see if there are any other places where there might be a floor, where it bounced off before. And bingo, we see it around the 122 mark, actually all the way back In August, we see in about late August where gold hit around the 122 mark and bounced off. So it looks like it's accelerating further down, but we will just wait and see. Always want to go back in time and see if you can find any spots where the ETF hit a point where it did not want to go any further down. And of course, the last one we see is around that 122 back in mid to late August. So just pay attention to that, put that in the wheelhouse, and we'll see how that continues to play out. Folks, that's where we are as we end the day on Wednesday the 27th and go into Thursday the 28th. Again, if you want all the information we have to share in order to get it, that is to be on the texting list, to be on the quarterly training list. And of course, we're getting ready to go out of these summer doldrums into the fall-winter trading zone. And to close out that quarter and to learn what those candles show us, please make sure to go first and foremost, subscribe for free at chartingwealth.com. And you want to simply go there, put in your first name, last name if you desire, your email address. We will start sending you the information on a daily basis, everything you need to learn about how we do what we do, you'll get for free. God bless, my friends. All the best from the entire team here at chartingwealth.com.